Hi everyone, welcome back to my channel. So today's video is all about understanding the functionality of VWAP. So let's dive right into it. So y'all can see I have Google pulled up here on the chart and I'm on the 2-minute here. So the first thing I want to go ahead and start with is explaining what VWAP is, and then of course giving full context and understanding of how it works. So VWAP stands for the volume weighted average price, and it shows you the average price a stock has traded at throughout the day weighted by volume. So instead of a plain average, it accounts for where the majority of shares have changed positions, telling you the true price consensus for the day. So keep in mind, it resets every single day at market open, and it is one of the most commonly used intraday indicators. So to pull it up, all you would simply have to do is click on the little beaker icon here, and then type in VWAP. So I'll type that in, and you'll see it pull up. I'm going to double click. Now, of course, you can make adjustments and modifications to it by hitting on the gear icon right here. And you'll see here underneath the VWAP customizing screen that it shows inputs and options. Now at the very top, we see the number of standard deviation down, and then here at the bottom, we see the number of standard deviation up, and it's set for a -2 and a +2. Now again, the time frame is set for day, so if you click on this, you can actually change it and have it defaulted to week or month. For example purposes, I'm going to leave it set for day. And then we can see here on the right side, it says show study, so you can leave that checked. It also shows you the plot names can be selected as well, the input names, and then of course it can also show and be displayed on the left axis. Now here underneath that, we see plots. And of course the first thing we see is VWAP, and then we also see upper band and then lower band. Now when we look at the VWAP standard, we can see of course it's set for the value to be numerical, but if you hit this drop down, you can also have it set for Boolean. Underneath that, you're going to see the drawing, and you can go ahead and select what you want your actual drawing to look like. It could be a line, it could be like a graph, it could be some dots. Any of these shapes would work. And then underneath that, we see the style. You can hit the drop down if you want it to be a dash line or dotted. Any of that could work as well. As personal preference on that. And then you can also adjust the width as well. So if you don't want it to be 1, you can have it selected to be 2, 3, 4, 5, any of the numbers you see here. And then from there, you can also select this little drop down here to change the color. I'm going to go ahead and leave mine set to this pink color just because that's my personal preference. Now from here, I'm just going to simply click on OK. I'm also going to click on Apply and then OK. Alright, so when you first initially take a look at this, it may be a bit confusing when you see these lines here. Of course, you see the upper band is this orange line, this purple pink line is going to be the VWAP, and then this yellow line here is going to be the lower band. Now, I will say some traders have a preference to not actually see the upper and the lower band. They just have a preference to see the middle band, which is the actual VWAP line itself. So in order to go ahead and modify that and change it, let's say you're one of those traders like, no, I don't want to see this upper and lower. Go ahead and just click back on the Studies tab, and then you can go ahead and edit. And then from here, you can deselect what you don't want. So for example, the upper band, if you don't want it to show, just deselect where it says Show Plot. And then do the same thing for lower band. Just go ahead and deselect where it says show plot, and then it'll be taken off. But if you want to make sure that this is always set, so every single time you pull up the VWAP indicator, it's always set to not have the show plot checked, go ahead and make sure you hit save as default up here. And once you click on this, it'll guarantee that it's saved to the setting. So from here, all you would have to do is click on OK, and then once again, click on apply and OK. So now we only see the VWAP line. Now real quick, just to give you the formula behind VWAP, the first thing that's important to know is that VWAP adds up each price multiplied by the volume from the beginning of the trading session, and it divides it by the total volume, making it a real-time evolving average, so you will see it changing from day to day. Now the upper and lower bands that we talked about of VWAP, again, those are going to be the standard deviation levels plotted around the main VWAP line, so it's similar to Bollinger Bands, but it's volume weighted. Now, depending on your trading style, you could use the upper band as like a level of potential resistance for a zone where the price is considered extended relative to the volume weighted value. Now, if the price touches or exceeds the level, it may indicate overbought intraday conditions, and aggressive traders may scale into shorts here if the price rejects. Now, if you were to keep the lower band, this can act as a support zone, a spot where price might stabilize or bounce if it's been heavily sold off. So price reaching this band can signal oversold intraday behavior, and long setups are often formed here, especially if the volume slows down and the price bases. And I've kind of made a video talking about the trading zone, so I'll leave a link for that down below. But all in all, the main thing to take away is that these bands are not automatic trade signals. They're more so context alerts. So like, for example, retracements from a band is equivalent to a mean reversion opportunity, and you can take advantage of that if you know exactly how to trade it properly. But let's just go ahead and hop into what we see here on Google on the chart. That way I can give y'all full context and understanding of how this is going to be applied. All right, so I'm going to go ahead and zoom in and we're going to take a look at the trading day here from the 22nd. Now, I will say that in my personal opinion, this was like a VWAP rejection day. And this offers a strong example for new traders who rely on price positioning relative to VWAP as you're still learning the process of how it works. So let me go ahead and provide the breakdown. So we can see here at the start of the market, the price ran up aggressively in the morning session and peaked at $176.77. Now this rally was pretty quick and steadfast to the upside, and we can see that this occurred above this VWAP line here, showing strong bullish momentum early on. However, that strength was short-lived. Once price dipped back below VWAP, it failed to reclaim it for the rest of the session. So from this point here at about 942, 944, and 946, we saw that the candles wicked above the VWAP line. However, they did not actually close above VWAP, hence why there was not enough buying pressure to push through this level. So after the initial high, the price pulls back through the VWAP and attempts to retest it in this zone right here. But notice that these multiple attempts to reclaim the VWAP at this 174 level failed every single time. So every single approach here got rejected. Now this is a key sign that sentiment shifted to bearish intraday moves. The volume-weighted average price is now a ceiling at this point. Now there is a ton of sustained rejection within this because we can see that once it leveled under VWAP, the price entered a prolonged downtrend. Now what makes this chart stand out is that VWAP acted as dynamic resistance throughout the entire rest of the session. And we can clearly see here that each bounce attempt failed. So here at about 1020, we can see it kind of got close to touching the line. We can see here at about 1044, we see it wicked above it, but again, it was still rejected from the line. So this is indicative of distribution, not weak decisions of selling. Now around the end of the session, we can see that the stock dropped rapidly near this $170.50 price level that I had already previously marked out. We can also see that the volume spiked slightly during the sell-off as well, signaling increasing selling pressure or forced exits. And all this simply does is confirm that the trend stayed intact and that short sellers likely added or covered into the weakness. Now for intraday uses of VWAP, I do want to note that it is often used as a trend filter. So the main thing to know if you're a new trader or you're just beginning to learn how to trade is that if price is consistently trading above VWAP, momentum is bullish. And then on the other hand, if price stays below VWAP, sellers have control. VWAP essentially acts as either a support or resistance level. And you can also use it as an entry or exit determinant. So traders use VWAP to enter on pullbacks. For example, in an uptrend, if the price may pull back to VWAP before continuing higher, giving you a logical entry near the average, this could actually play in your favor. However, you want to fully combine it with understanding price action and market structure. You can also use it for reversion plays as well. So mean reversion traders use it as what I like to call a gravity point. So if price gets extended from VWAP, they'll fade the move back toward it, especially near high volume consolidation zones. Some traders use VWAP for standard deviation bands to scout price extremes. So think of them as like baselines around the average price. So if you're trading using VWAP, make sure you understand a few things. One, there can be a short bias setup. So the ideal short would have been after the ideal reclaim of VWAP post-morning high. Now you'd want to get in on the lower high when VWAP starts acting like a wall. Now this can also provide confirmation through compression. So the range can tighten under VWAP for most of the day, then driven into a breakdown. This consolidation below VWAP can set up a clean risk to reward short in the close. But always again, make sure your risk management is on point. So you can set your stop just above VWAP, or the most recent rejection that you see, you can have it set right above that wick. Now just as a little side note, this specific trading day is what I like to call a VWAP fade, simply because this is where strong morning strength faded and price remained under the volume average all session. Now institutional players often reduce exposure during these setups, and I've talked to y'all about that before as well. It's also common in stocks that gap up on news but don't hold momentum. Now, one of the main things I also want to mention in this video is that VWAP and moving averages are not to be confused with one another. So remember, VWAP is volume weighted while MAs are price only weighted. And another way you can tell the difference between the MAs and the VWAP is that the VWAP resets daily while most MAs are continuous. So think of VWAP as anchored to the session while moving averages drift based on look back windows. And because of that, VWAP represents where volume took place, which adds context to price movement. So I think y'all know what I'm talking about. If not, then think of it like this. A 20 EMA might rise because of a few high candles, but VWAP won't budge unless significant volume participated at the price level. That's a strategic upgrade. Now, standard VWAP again is going to reset every single day, but anchored VWAP lets you place the calculation from a custom point. So it could be something like if you knew you had earnings release, it could be a gap up or down for the day, a trend reversal. I can even think of like maybe a breakout candle, or even if there's like an IPO launch. This gives you a volume weighted price since a specific event has taken place, which then gives you a little bit more insight into the average buyer's position since that moment. And it's really a gold mine for swing traders. So that's just a little pro tip to keep in mind as well. Now, if we're talking about trading as far as smart money using VWAP, I want to be very clear that institutions don't randomly trade candles and patterns. They often use VWAP to split large orders. Now, one of the main reasons why VWAP matters, especially to the big players and traders in the game, is that institutions and hedge funds do not trade like retail traders. They want to hide their true intentions. So because of that, they use VWAP as almost like a target to determine if they're buying above or below the market consensus, because all it is their anchor point. So we all know that there's a ton of algorithmic trading that happens. So when they use their algos, they often execute trades when price approaches VWAP. They also do it to hide size to avoid slippage. And then of course, another reason could be to benchmark execution quality. But if you're buying well above VWAP and the price snaps back, you're the liquidity provider for someone else's exit. Again, they're using it as a determinant. So I hope that makes sense. So to highlight this, if you're buying below VWAP, you're basically buying with the value on your side. If you're selling above VWAP, in essence, you're letting price work in your favor. Now, there are times where you should not rely on VWAP on its own. So let me go ahead and move forward the trading day so I can show y'all exactly what I mean by saying that. Scroll over, and we're going to go here to the 23rd. Now we can clearly see a difference in how the VWAP line is actually displayed on this specific chart, based on the price action for this trading day. Now, as stated, there are times where VWAP is not going to be the most reliable, and this could be caused by low volume stocks. So we can see here where the trading was very low on the volume. This can also cause the VWAP to either be erratic or misleading because it could be stagnant. And we can clearly see that here. We can see that the VWAP line is going straight through a lot of these candles, which shows that there's not a huge significant move in the price. And I can prove that by showing you exactly the high and the low. So if we look at the low for the day, we can see it was at about 167. And then if we go ahead and look at the high of the day, we can see here it was at about 169. So that's only $2 of a difference in the move from the high to the low, which explains why there was no clear direction of the VWAP to be trending above or below for a very long extended period of time. Simply because the numbers wouldn't allow for that because the stock was in this range of only $2. Versus if we look back here, we can see the high and the low for the day prior was at the low of $170 it looks like, with the high of $176. So that's a $6 difference between the two prices. Hence why we can see the stock trading well above VWAP or below it. So I think that's a pretty clear example on how that can be differentiated. But going back to it, it's also important to know that after hours or pre-market, VWAP is based on regular session volumes. So at the start of the market, it's going to reset. And I can add that during extreme news catalysts, price can overshoot VWAP and never revisit it for the session. So that's always a good thing to make note of as well. Now, the best use case for using VWAP, if you see the price breaks out on high volume and runs 2% above VWAP, then pulls back, you can wait for the retest of VWAP and then enter near the average, catching the next move higher with minimal risk. But this has to be very calculated if you see it on the chart. The other option is that if you see the fade rejection at VWAP. So let's say price fails to reclaim VWAP after a morning sell-off. You can short the rejection candle near VWAP with a stop just above it, aiming for a pushback towards the low of the day. So those are just two strategies you can utilize when you're trading. So overall, the main takeaway is that VWAP isn't just a line. Of course, it's a volume-driven indicator. So when used correctly, it tells you who's in control, what price levels matter the most, and when a move is exhausted. You can also get a clear picture of where liquidity wants to gather. So if you're brand new to trading, I will say that there are some traders who get trapped chasing price. So VWAP can help you think like a strategist, since it invites patience, price discipline, and a smart positioning outlook. So if you're tracking volume and momentum, make sure that you understand VWAP deserves a permanent place in your setup. So yeah, y'all, these are all the basics of understanding VWAP. Y'all let me know what y'all think. I hope the information was pretty clear and it also helps any beginners or new traders. And if y'all want me to go into more detail, I definitely can as well. And with that, that'll pretty much do it for this video. If you found any of this information to be helpful, feel free to leave me a comment down below. As always, I thank y'all so much for watching. And of course, I'll see y'all in my next one.